Morning, everyone. We're probably all a little sluggish after a couple days, but welcome. My name is Dan Friedberg. I'm an attorney in Seattle, a corporate lawyer, and I specialize in helping companies grow in innovative spaces like Bitcoin. I'd like to start off just by introducing the members of the panel. Patrick, maybe say a bit about yourself. Patrick is the general counsel for the foundation.
Yep. Hi, so Patrick Merck, I'm the General Counsel for the Bitcoin Foundation. I'd like to take a second and just thank all the volunteers here who have helped put this conference on, and Lindsay Holland, who's done a just amazing job putting this together for us at the Foundation. Yes, thank you. So if you see somebody in an orange shirt, give them a little high five or something for me. We've heard a lot recently about what's going on in DC, how we're reacting in DC. We'll talk a little bit more about this with our members at the members' lunch later, but I think my message is the sky is not falling. We have a strategy in DC. We're in DC right now. We're working on these issues, and I think you'll start seeing the results of that soon. So that's my role with the foundation.
Just as another point, I know the foundation is soliciting members. It's very important for all of us to participate. It's just a very small ask, so it's something we should all consider.
Good morning. My name is Mickey Malka. I run a venture fund called Rivet Capital, which is solely focused on investing in companies that are disrupting the consumer experience with financial products. And we've done so far a few investments in the Bitcoin ecosystem, and aside of that, we do other verticals. And personally, I've been an entrepreneur disrupting consumer financial services for over 20 years.
Hi, my name is Arlene Chan. I am a CPA. I am an audit senior manager with the firm of Moss Adams. We are a West Coast-based accounting CPA firm, and we serve the high-tech industry. We've got around 2,000 folks, of which 250 are partners, and we're based out of Seattle. This is our 100th year, so we're very happy to be here. And we have professionals all up and down the West Coast and going inland as far as Kansas City.
My name's Stuart Hoegner. I'm a gaming attorney and an accountant based in Toronto. I'm called the bar in Ontario and next door in Nevada. My clients are in the gaming space for the most part, and some overlap into getting into Bitcoin. So I'm really happy to be here, and thanks for having me, Dan.
So really today, what we'd like to talk about, we're heavy on the legal and accounting side, but we're really going to focus on Bitcoin businesses that are starting and growing in this space. And we're going to talk about some of the obstacles they have towards raising funding, which has been difficult. Mickey is a very forward thinker in the VC space. VCs are beginning to trickle in, but established banks, this is way too early of a space for them. So we're in a circumstance where I think from the very beginning, when you form a company, that you want to plan to have a liquidity strategy. And a mistake that's often made is that companies are formed and people get into business and maybe laws are violated, maybe money is raised in the wrong way. These types of things can preclude being able to raise capital from sophisticated money. So, and this space, as everyone knows, it's uncertain. A big development, of course, was the FinCEN guidance, and that told us a number of things. Is it a surprise? It's not a surprise. The U.S. is regulating this area. Is it a surprise that they later enforce this guidance against the largest exchange? Might be a surprise that they move so quickly. But the U.S. is underfunded. They're always looking for cash to seize. They no doubt waited until that balance was a big balance. And that seizure order was probably only part of the whole story. In other gray market areas, a typical approach is to have sealed indictments against the individuals of that company. The reason they seal those indictments is so they can catch those people when they come in at the border. I would be surprised if the only legal documents out there were this seizure order. So we haven't seen the last of that. But as far as for the industry of the whole, I think it's ultimately going to prove itself to be a good thing. We can't be reliant on so much on one exchange, which isn't regulated. That's not going to be a way that we can succeed. So what we need is a broad market of exchanges and people who are serious about complying in our country. Certainly, people can build businesses that cash flow, but in order to access the public markets and sophisticated money, they're going to need to comply with the rules. So anyway, so that's a bit of background. I'd like to, one thing that I've noted here is that there are a bunch of different categories of people here. And I've looked at some people who are here just as investors in coin or traders in coin. There are the miners. There are the exchanges, which are the most highly regulated of all of them. There are the users of coin. And then there are companies that simply want to accept coin for services or goods. We're going to really concentrate on those growth areas that potentially could become public companies at some point on this panel. But we are familiar with the laws affecting all of them, both regulatory, tax, and corporate. And there will be a question and answer session, and you can ask questions about any of those categories. So I'd like to start by just talking about the very beginnings of companies. So I do maybe about 10 or 20% of my work just with startup companies. And we sponsor various startups actually at our firm each month. And these are startups that are unfunded, just starting. And there we see the founder relationship starting. I have seen many, many disputes amongst founders in my career. And the selection and picking of the founders is a critical step. And developing an agreement between the founders if things don't work out is also critical, in my opinion. So one way that companies can avoid a lot of heartache is to try to set down what's expected of the founders and what are the consequences of those founders not performing. A lot of people in this space are very young people. People move into different careers. Expectations about who can fund the company change. By setting stuff down first, it can really help. So that's really one lesson. And the other thing is we, as a lawyer for the company, it's sort of important to protect and position the founders as more sophisticated money comes in. Oftentimes that money comes with strings. And many times that money, has in the back of their mind their own management team that they want to install. There's not much you can do about that. It's often a natural growth of a company. But the one thing a lawyer can do is at least protect those founders economically in that circumstance. But that is always a big risk, especially with companies that have young founders, particularly, I found. And it's very common when they shop on, with venture capitalists, that the first thing the VCs are thinking is, I know who would be great to run this. Let's install my own people. So with sophisticated money comes some strings. And it's important to try from the beginning to sort of set up the structure so the founders are best protected. So I'd like to, Pat, who has had experience, I know, with a number of growth companies and taking in venture capital. Maybe, Pat, you can talk about some of the traps that the companies see when they're in that process.
Sure, and I know, Mickey, you'll have a lot to say on this subject as well after. So I've both been in venture-backed companies and I've represented clients who have been in financing rounds and helped them negotiate those financing rounds before. There are just some simple things to keep in mind. One is are you getting a standard term sheet? First, are you set up in Delaware? Are you a Delaware C Corp? If you're not really a Delaware C Corp, I think it's very difficult for somebody like Mickey to make an investment in you in the first place. So just getting that, your house in order there. Talking to investors really, really early in the process, getting those conversations started so that you're setting things up in a way that you can create a fundable company instead of a company that's just kind of a morass because it's an LLC or an unincorporated entity or something like that. That's just a lot of transactional cost on the deal. Understand that there are certain terms that are negotiable and there are certain things that aren't. Your investors, if you're doing a valued round, they're going to get preferred stock. There's no world in which they're really going to get common stock, and they're probably going to have a liquidity preference. It's just what the multiple is on that. But there are just certain little ins and outs there. But I know that, Mickey, you could speak to this more directly, what you're looking for.
So what Dan was saying is also very, very true. This is all about culture and founders, and that's what we seek. Most companies fail because the founding team could not get along. They just could not get along. They change opinions, they fight, they get some ego trips going on. They may be equal shareholders, but one of them has to be the CEO, another one has to be whatever is the other role, CTO or Chief Product Officer, whatever you want to call it. But having two guys share responsibility, that's the majority of the times you see failure. So the first thing I look for is to see the chemistry of the team. If they are friends and they join and they were friends all their life and now they're doing a business together, it's tougher because friendship has a higher, they did this because they're friends. They didn't do this because they found each other who were the best ones at doing what they were doing. It's not like it's not gonna work. It's just a yellow light right there. You need to make sure that they're getting together because they are the best two guys at what they do, or three guys or whatever is the number. And then you want to make sure that they're doing this for the right reasons. And my advice, which I always tell them, is look at the eye of the guy who's on the other side, which is me in this case. But I've been for 20 years, I was on that side of the table, so I can talk with some certain level of certainty about it. And look at their eyes and see if you have a bad quarter or a bad 6 months, or FinCEN comes in and stops all business for 6 months, and there's not much you can do but just get regulated, whatever it is in this ecosystem. Look at the guy's eyes and see how is he going to react. Is he going to be pointing fingers and trying to blame you or try to get you out and do something different, or he's going to put his sleeves up and he's going to help you solve the problem? So it's a two-way relationship. You need to find the guys who understand and are going to support you and your vision, and that you can seek advice from, but they're not going to come here to run the business. So that aside, from a capital perspective, I think Patrick nailed it. It's risk capital. Venture money is looking for high growth opportunities. It's not looking for cash flow. There are other pockets for cash flow. Personally, I may be interested in cash flow, but from a venture fund, I'm very interested in growth capital. We're interested in ways that you can compound money faster than you can make it. We're interested in teams who have great ambitions of taking big risks and knowing that there are many ways to get there, but just to understand what's at stake. The Bitcoin ecosystem so far has looked upon one of being, we're all early adopters. We've been in this, I don't know how many people have been playing for this for the last 3 years, how many for 2 years or 1 year. I'm in the 18 months already cohort, as I've been playing with this for 18 months personally. But I can attest that the level of people coming into the ecosystem to play, to invest, to build companies, to look at opportunities, is getting smarter and it's getting more aggressive, and they're getting more competitive. This ecosystem is starting to see that as any other business that spun out of a new way of doing stuff. So that means there's a lot of hype too, which is, I believe, is the most dangerous part of what's going on. Is bubbles are not good. They're part of nature. We have them, but they're just not healthy long term, and we just have to know how to ride them and understand them. So those are my experience and the way we look at the investments right now in this space.
Yeah, and I would add to that one of the things in this space in particular that you should be looking for in an investor, and Mickey's got this nailed, of course, is somebody who understands the regulatory environment and has been in a regulated industry or has invested in regulated industries. There's what's called smart money and dumb money. And in this space in particular, you really want the smart money behind you, because otherwise they will start pointing fingers when things go bad.
So Arlene, who's a very experienced accountant in taking companies from the start all the way to going public, maybe you can talk a bit about, some of these companies here are very young, just starting, probably aren't ready for a big firm yet they have to at least create a slate so that their finances will ultimately be auditable. And Mickey probably doesn't require audits for most of his investments, but as you get to the higher level banks, that's required, and certainly for a public strategy. So maybe you can talk a bit about how these companies can plan. One thing that's nice about Coin is that we have the history of the transactions in the chain, which is audible. So I mean, I think that the inherent qualities of Bitcoin lend itself to being able to verify a business's history. But
Sure.
but Arlene, maybe you could talk about that.
Great. So I always like to think, well, we think of ourselves as business advisors, not just as accountants. You can use a business advisor, especially on the financial and the accounting and the tax side, at any stage of your company. So I always like to start with a pretty trite phrase. It's begin with the end in mind. So if you think about where you want your company to be in 1 year, in 2 years, in 5 years, you want to think about what your exit strategy is, and then part of building towards that milestone or that exit strategy, whether it's VC investment, whether it's M&A type situation, there are a wealth of administrative and transactional costs, coming back to what Patrick was saying, tied to each stage. And as you are coming up through building towards that next milestone, there are different things to consider. So if you are a very new company, you're probably working out of, with a proverbial shoebox. One of the things that I would highly recommend for companies that are in that inception stage is to really get organized. You're focusing on developing your revenue model, your business plan, you're focusing on your product and developing, but the administrative side should not be first priority, but it should never be neglected either. One of the key things that VCs and other folks who may want to invest in your company, first thing they're going to ask is to look at your financials. Now, it doesn't have to be sophisticated, and your business plan, by the way. So it doesn't have to be sophisticated, but it needs to be there. So having the documentation to support what you're doing with the resources that you already have. Maybe you have some personal money of your own, or you got some friends and family, or you have some angels who helped you. So what you did with that money and being able to elaborate on what you did with that, that's a key first step. Tax is always a concern. It's always good to have that part of your house in order. It's just normal compliance, regulatory. It's not a fun thing to do, but it's a necessary thing to do.
And I'd just jump in on that one too. Sorry, maybe I'll do this for everybody. One of the things I used to tell my clients is to always keep in mind that you're building a business, not a product. And so that it gets right back to what Arlene was saying. So if your focus is early stage, especially, I understand, like your head down, you're just coding and you're trying to get something out there, and that's the most important thing, is just executing on anything. But to keep in mind that there is a big picture and you want to create a solid foundation that you can build on later. And I'd be interested, Mickey, in what your thoughts are and how much of this work you should be doing up front.
Yeah. It's always a headache to do this work because you focus on trying to build a business, but hey, it's Bitcoins, it's money, it's financial services. Like it or not, it is what it is. And it's a symptom if you don't spend the time starting with this from the beginning. It's a symptom on the discipline of the entrepreneurs. It's a discipline on how they think about money and how they think about compliance. Keeping a cash flow, a balance sheet, or where at least knowing where stuff is key symptom, because if they cannot do that in their own proprietary balance stuff, imagine if they're running people's money, or they're doing a wallet, or they're doing an exchange, or they're doing any kind of services that involves other people's money. So I fully support the vision that in this category in particular, maybe in social platforms, you can say, oh, I'll do it later, no worries. I know I need to be viral and get my product, but in something like financial services or Bitcoins, there's no way around it.
Yeah, and to add to that, contracts management is very key. What I've seen a lot of times is that it could be a delay factor in your financing and your fundraising if you don't have all your documents in order that are accessible, whether you keep them hard copy or you scan them and keep them soft copy in a secure server or in a PDF on a jump drive, whatever it may be. But having all those sorted out and knowing what you have and what you have not, half the time what I see are delays in financing because the attorneys doing due diligence are looking for a key contract, for example, contract with the founders for future royalties or whatever it may be, and it can't be found, and that becomes an issue. So having at least some administrative sense about having completeness of contracts and documents, that's important.
Another thing to note is from the dollar side, these sometimes failures to comply create legal risk, and that will be identified by a firm, as smart as Mickey's. And what that will happen is that'll discount your value. They'll look at your company and see that there are legal risks with it, and they'll put that, they're smart enough to determine that they have to, that affects the value of your company. In some cases, it might even preclude investment until the problem's taken care of.
Yeah, I would say in this space in particular, it's very hot, and there are a lot of talented teams that are coming into this space. And if you don't have your house in order and you're not organized, and you send up one of those red flags that Mickey was talking about, my guess is that, and I don't want to speak for you, but my guess is you're going to move on to the next team, because there's probably 5 people working on your idea right now.
Yeah, Paul goes into the too difficult bucket, and you just leave it there and you move on to look at something different in the ecosystem.
So thus far, we've sort of talked about the traditional company formation, and as Patrick noted, the most accepted is probably for this type of growth would be the Delaware C Corp. But I advise all different types of businesses, and some aren't fit for that traditional route. And yes, that can preclude money like Mickey's, but unfortunately, due to the legal risks and uncertainties here, sometimes the U.S. isn't the best place to be. I work closely with Stuart on a lot of these issues, who's international lawyer, has worked forming companies in many different domiciles, and is sophisticated with the tax piece of that, which is a very important piece. One thing to note about our country is that it's not great for taxes. It's great to access the financial markets, but it is an expensive place for taxes. And there is serious uncertainty in our country about the taxation of some of these areas. For example, miners, for example. The IRS hasn't taken a position on Bitcoin mining, not surprisingly. However, there is an issue as to whether or not when you do successfully mine and receive newly issued coin, is that a taxable event right there? That hasn't been determined yet. I know most people are treating it that it's a commodity and there's no taxable event until there's an exchange. But that is a serious issue affecting miners that hasn't been addressed yet. If you equate it to, by analogy, to other industries, if you're out there pumping for oil or looking for gold, when you find that oil or gold, you don't have to pay taxes on it. It's held as reserves until you exchange it. So that's the model that I'm hoping, and my clients are hoping, that they follow. But the alternative model in our crazy country, if you were walking down the street and you find a diamond ring, the IRS assumes that's taxable. That's called treasure trove income. So, I mean, as outrageous as that sounds, that's the world we live in. So there's uncertainty in the tax structure as well, and so oftentimes I work with Stu to find the best domicile, and really there's 3 different areas that I'd like Stu to touch on, is tax, anonymity of the investors, which can be very important, and also legal compliance. And if you could talk about that and how those factors sort of impact companies that decide that the traditional path isn't right for them.
Sure. I guess just by way of introduction, the Canada Revenue Agency, which is the IRS at home, seems to me to be equally confused about Bitcoin. They also haven't taken a position on miners. They're talking a lot about barter rules and commodities rules, which I think is just wrong-headed. I think they should treat it like a normal currency. So I don't think that they've particularly thought that through well. But we'll see. Thus far, apparently there's a ruling. I haven't seen it, but thus far it's just been news reports to the Canadian Broadcasting Corporation. Apparently comments to them. So we'll see when they come up with any interpretation bulletins on it. So on the tax side, my experience is a little bit more narrow than the other folks on the panel, certainly the other lawyers on the panel. When I'm engaged, when I was at Ernst & Young, or as a law firm before, when I've engaged at the raise or the prospectus stage, it's almost been, we look at the entire prospectus, but it's almost entirely to draft the corporate structure and to do so in a tax efficient manner within the bounds set by our client. And as everyone has indicated thus far, the factors that can go into determining that structure are myriad. So it can range from location of your markets, location of your workforce, as Dan said, limitation of liability, the stability of the legal structure there, and tax. And tax can be a tail end consideration, and I'm well aware of that. I'm not. There are far too many tax practitioners out there who think that it's their way or the highway. Here's the best tax structure. That's the end of the matter, and that's just false. So tax can come in at the tail end of the discussion and can be a very subtle thing, balancing two very healthily competitive jurisdictions that have very similar tax structures and tax takes, and they can go all the way to incentives provided by local governments to invest, where tax can be front and center. It can be a driving force. So that's something that always has to be borne in mind. Dan asked about anonymity. I'd rephrase that slightly and put it in terms of privacy within the bounds of what's both legally possible in any jurisdiction that you're considering, be it offshore, be it the United States and any of the states here, and whether it concerns investors, whether it concerns data protection for consumers, for your customers, and all those kinds of things. Those are all critically important. And then legal compliance also just varies. In OECD countries, you'll find a heavily compliance-focused environment, especially in financial services. That's definitely been the lesson over the last couple of days. And you'll find jurisdictions that have a relatively light touch, and sometimes you get what you pay for, and sometimes you aren't able to locate in the jurisdictions that you want. That might be ideal. It might be light on the regulation side for any number of reasons, any number of the factors that we already spoke about. Some of the other things in terms of proximity to markets, transportation links, et cetera. So, I'm not sure if that clarifies anything really, but it's part of the tax is part of the mix. It has to be considered. All these things are important, and on any particular deal, it really just depends on what the drivers are and what the end game is and what the structure is that everyone at the table is going to want, all the stakeholders are going to want.
So I know that, sorry, Mickey, go ahead. I know, Arlene, I know that you've worked on some of the mining issues in particular. I'm curious if you can talk about kind of what you found.
I think it's a very emerging area. There is, I don't have, there are a lot of specifics that I don't want to get into right now, but it is an area of scrutiny and probably diversity in practice, honestly, when it comes to accounting for it and thoughts about how it should be presented. So I'm just going to leave it at that for now.
Didn't mean to put you on the spot, sorry.
So I do think that I agree on the U.S. probably not being the best place right now for some of these opportunities. Just imagine if we had one government anywhere in the world. There's like 5 or 6 markets who are trying to become very big financial hubs. They've been investing billions of dollars in trying to make themselves a financial hub, like Dubai or Singapore or Ireland at the time, or Iceland, all of these countries. Imagine if they came out with one simple press release that said that they're okay with Bitcoins being custody in their markets, or they're okay with ecosystems being built locally in that market. That creates a level of credibility worldwide that changes dramatically and probably shifts the whole legal structure on how we structure ourselves, how do we think about domicile, how do we think about space. I personally have been talking to 3 of those governments, just trying to see if there's a way to get some sort of support for it. But if anybody has more ideas, we should talk to Patrick about it in the Bitcoin Foundation and see if we can find ways to do that, because that will clear a lot of the issues that are right now clear, because maybe we find a better place that it's not the U.S. to domicile some of this for a while until there's more regulatory clarity here.
Which gets back to my comment about smart money, right, and finding smart money. So I think what you alluded to is really important. I think to follow up on that, the day that a country, even if it's a tiny country, allows its citizens to pay tax in Bitcoin is the day where all the regulatory uncertainty goes away. And then we have very, very clear rules. And I think that would make your job a lot easier.
Yeah, for sure. Yeah. All of us.
Yes.
One thing to keep in mind when choosing an alternate jurisdiction, or even your business here, is the banking problem. So banking is one of the most regulated, probably the most regulated industry in the U.S., and we have several different layers of regulation. We've actually been lucky that there are some leading banks who have agreed to at least take operating accounts from companies in this space. And I say we're lucky because they're really going out on a limb a bit to do that. But when you get into these international countries, it actually can be even much more difficult and more rigorous compliance to open bank accounts, interestingly. And Stu, maybe you'd want to comment on how banking can play into the choice of jurisdiction, because I know that poor Stu's flown all over the world in efforts to open accounts. So,
it's weird to talk about the importance of banking with a Bitcoin business, but it's banking can still be a very important and a critical factor in where you locate a business in this sector or any sector, really. And Dan's right. It can just depend on the jurisdiction. Some banks are in some jurisdictions are great to deal with, and others are less so. Let's put it that way. It's also something that will drive some of the things that you think about in terms of building your business and your corporate structure. An easy example. Very few people do this anymore, but an easy example is a bearer share company, where you have perhaps everyone knows all this already, but you can have registered share companies and you have bearer share companies. Bearer share companies are essentially the bearer holds the instrument and is the owner as a matter of law. So the share certificate isn't recorded, it's just made out to bearer. There are jurisdictions, not many of them, there are jurisdictions worldwide that will still incorporate bearer share corporations, but it makes it incredibly difficult in almost any banking situation to open up a bank account, because it's the KYC and the compliance team inside the bank will make it absolutely impossible for you. because it's seen as such a risky proposition, and it's so fraught with opacity and just a lack of disclosure in terms of having this bearisher instrument. So that's another thing you'll have to keep in mind when you incorporate and you build your structure.
Yeah, I was just having a conversation. It's interesting we're talking about banking. I was just having a conversation with a compliance officer, and we were kind of, comparing notes on how do you order the calls that you return, right? Like in what order? Government's always number one, right? And I think in this industry, number two is your bank, right? You cannot overstate how important your relationship is with your bank, especially if you're running a Bitcoin exchange or you're doing any Bitcoin to fiat transactions. Your bank manager should be your best friend. Take them out to dinner.
And I want to push back a little bit then on your argument that banks abroad are tougher than some other places. I actually think the contrary. I think that the U.S. banking rails are one of the most arcane systems in the world. It makes no sense that an ACH takes 2 to 3 to 5 days and it can be pulled back for 30 days. That doesn't exist in many places around the world. So the amount of fraud that happens because of that, it just simply doesn't exist. So the risk of having a banking relationship in Europe or Brazil or South Africa or Turkey, those systems are all in real time. Once money is there, it can be pulled back, but it's another process. You don't have the risk of being called for 30 days and having businesses like Coinbase who are trying to build a retail business having to wait 4 or 5 days, which is frustrating to all of us to buy coins. It's just, there are much better, that by itself takes a layer of complexity out of the relationship with the banks, which is right now the bankers have a job, which is to be risk adverse. That's their job. And every time you see risk, they're gonna move in the chair and they're gonna get uncomfortable. And for what it's worth, some of the rails that we have to use in the US for Bitcoins, unfortunately, are the rails with the highest level of fraud and risk. So they get even more uncomfortable with that. So not knowing how to think about that, there are ways to solve for it. Maybe more companies need to try what Canada does very well, which is a PIN debit. And the US is not very used to it, but you're in Europe. So maybe you have to think about more of those things within your processes or your businesses to avoid, to be more compliant with banks and make them more happy.
Mickey mentioned Canada, so I'll just jump in with one further comment. I've heard rumblings that 2 of the major charter banks, we have a charter banking system at home, 2 of the major charter banks have refused to do business any longer with one of the exchanges in Canada. Now, I want to be careful saying that just because I don't know what the circumstances are. It's not a client of mine, so I don't know if it's about that particular actor or if it's about Bitcoin as something broader. But it's just something to keep in mind as well. So even in Canada, you can have your own difficulties, I guess.
Yeah, I'd add as a kind of a risk factor you can mitigate really early on too is it can be frustrating to find a bank that will actually work with you, and you can take 8, 10 different tries, and sometimes still it doesn't work. Yeah. But I have seen too often companies fail because they did not adequately disclose to their bank what it was they were doing. And they'd open something like a small business checking account and run an exchange through it. And you've just set yourself up to have your account frozen and to fail as a business if you go that route. So you have to put in the legwork early and manage those relationships early and build those relationships from the start. Again, it's different than a social media play. And I've been in that type of company before where you just go and you don't think. This one you have to think a little bit first.
I agree 100% with that comment. I think you have to be as open and as candid and as forthright with your banker as you are sometimes with a regulator or with an insurer. It's imperative.
So just a quick note, since we're talking about foreign bank accounts, potentially foreign, there are IRS reporting regulations that even if the money stays abroad and doesn't come back into the U.S., there are some informational reporting that you're required to do. So check in with your local friendly CPA who can tell you what to do.
Oh, that's an interesting point, and that ties right to coin as well, because the FBAR requirements are applicable to offshore accounts, even at a place like GOX. So if you have cash at GOX, their position would be that that's a foreign bank account. I know I've had poker clients with money on poker sites, and the top gambling CPAs all recommend that we file FBARs on those, just to disclose the account balance. So whether that applies to coin is a little bit uncertain, because there you have the question of where is the coin domiciled. So to the respect that you actually hold the coin, that's, I think, much more uncertain. And I haven't really gotten definitive advice on that. But certainly if you have cash accounts at any of these exchanges abroad, I would comply with the FBAR requirements. And it's the consequence of that is simply that it's out there disclosed. You're going to have potentially tax issues that you'll have to comply with, but I would err on the side of compliance there typically.
Dan or Arlene, are there de minimis tests for the FBAR rules?
Not that I know of, but I'm not an expert in this area. I just know that there are required filings.
Yes, there's a de minimis level. I think it's $10,000.
Okay.
So it's not every account that needs to be disclosed. In addition, I believe it's the balance at the end of the year, so you can play a bit with the balance.
I was going to say, is it a transaction flow thing or a balance thing?
So you said not all accounts need to be disclosed. Is it aggregated or is it per account?
I believe it's per account.
Per account.
Okay, got it.
So, well, we got a little bit in the weeds there, sorry. But while we're on the topic of banking, a great solution for our industry is for a U.S. financial institution to actually take the compliance function of being an exchange. We've talked a lot about the FinCEN regulation so far, and there may be more questions. But those rules on money services businesses, banks have an exemption to those rules. So the quick question, that I have is, when is a bank going to take coin? Certainly, when that happens, I think the price of coin is going to just go to the moon, and I think it will happen. But what are the obstacles to it? I don't think it's going to be the state regulators. I believe the big obstacle is going to be the FDIC. I've been in contact with the regulators and the FDIC, and the FDIC is in very early stages understanding it. So I believe that we're going to have a 6-month or a year period just when they come to grips with Bitcoin. Interestingly, it's more of a safekeeping function, as people know. It's not a deposit or a loan that creates real risk to the bank. So I believe it's a proper banking function, but it's just going to take some time until the regulators are comfortable with it. Okay, so moving on, Mickey, when you see an industry like this with all sorts of regulatory and legal risk, I know it creates both an opportunity and a risk. I'd imagine in other areas in your fund you've had the same scenario where industries are pre-regulated or unregulated. And do you sort of view that as an opportunity or more of a risk?
So I started a broker-dealer when I was 17 in my home country. So I've been regulated for 20 years now. I even started when I was underage, so I was not regulated for the first year. So I regulated about 8 central banks for the last 20 years because I've owned or operated in banks on different continents. And I see all of this as an opportunity. Actually, I would welcome Bitcoin to be supervised, whatever that means. I think it will allow us to unlock the full value of the ecosystem. It will allow us to unlock the value of the power of allowing money to move from one place to another in unlimited quantities in real time to any individual, merchant, or computer in the world. So I see it as an opportunity now as an investor in the category. You just have to think about it. You have to go in willingly knowing that it can be worth zero if tomorrow something happens to it. And more importantly, you need to, with as much as I like, and I'm an ambassador of Bitcoin, I walk and talk, my wife cannot hear me anymore talk about it. You have to realize that it may not be Bitcoin. It may be something within the cryptocurrency systems it's a Bitcoin 2.0. Who knows? It's the same system evolved. And I'm not saying it's going to happen. I'm just saying that as an investor, you got to be conscious about it. So when you make your investment bets, because one thing is to go long the coin and just bet on the coin. The other one is the companies in the ecosystem. They need to be able to think and behave in a way that they can serve customers and build financial brands. That's the way we're looking at it. The toughest thing in financial services is to build an equity in your brand. But once you do, it's very, very rich. It creates a lot of value, a lot of enterprise value. Financial brands do not come every other year. They take a long time to build. And Bitcoin has a chance, the ecosystem has a chance of building brands that we're going to go back 5-10 years from now and going to say, oh, wow, I remember those guys. They had a small booth here, and they were the two founders sitting there, or they had 3 guys, and now look at them. They are a custodian of assets or of coins, or they're an exchange, or they're a service provider to 1 million or 2 million people around the world with their trust. So that's the way we're looking at it. That's the way I look at it. So it's a asymmetric risk right now. It's either worth zero from where you're investing, which makes that's fine. That's what I get paid for. But there's an asymmetric risk of building massive value over the next 10 years and forefronting a system that is simply much better for society. There's no doubts about it. It's just there are, and I said this a few days ago, there are 5 billion phones in the world right now, mobile phones. And somebody's doing a good job on making all those phones smartphones. It's not any of us here. It's the big companies. And there are 1 billion banked accounts, if you add prepaid cards or checking accounts. So what are the chances of the good old banks banking 4 billion people versus what are the chances of a currency like Bitcoin or a system like an ecosystem like Bitcoin allowing those 4 billion people to transact in ways that we transact today? I'd rather bet on the latter and on this option, and that's why we're so optimistic with the whole ecosystem.
So,
I would say, because you mentioned getting involved in pre-regulated industries and as they become regulated and all that, I think that the message that we've heard, whether we like it or not, in this room, is that the exchange game is not for amateurs anymore, right? If you want to build a Bitcoin exchange, you need expertise and you need resources. That's the way you're going to do it. And if you try and get into that game fast and loose, you're going to find yourself quickly in trouble.
right, and it's really a sad thing that can happen to a company, to build a great company and then to be shut down because of legal reasons. So this is with this thing with GOX, we see that the U.S. is taking this seriously. So, and I agree with Patrick, the biggest thing that we've learned is that the exchanges are the most regulated, and the point when Bitcoin is converted into currency is the choke point. And that's where the government is going to try to get us. There are some good things in the FinCEN release about how if Bitcoin stays within that Bitcoin system, you're probably okay. And certainly there's a safe harbor for users. So there's some positives in there. We didn't, before that release, I wasn't sure exactly how the Treasury was going to react to coin. And they could have taken a much more draconian view of it.
If you had to prognosticate, Patrick, do you think they'll take, which path do you think they're going to take?
I'm an optimist, so there's in DC there's a lot of talk about public-private partnerships, which can sometimes be true, and they will work with us. And I think that in general, the folks in DC want to work with us and work with people in the Bitcoin community to understand what this is and how they can accomplish their mission. Unfortunately, sometimes public-private partnership means collusion with incumbents, and so hopefully that's not where we're headed.
And we can start to take questions if anyone has them. Please just step up to the mic. But before we get to that, I'd be interested in Mickey's comment. As a lawyer who helps companies, access the public markets, to me, Bitcoin seems at this stage, it's a ways away from that, but not that far. And I think some other financial markets, like in the UK, are much more likely to punt on a company that's in Bitcoin and take that risk. And I think we will see companies going public in a year or two, starting in Europe. But I was thinking with Mickey, the clear and seems to be the obvious industry trader that could fit that would be an exchange. But I don't know if there are other aspects of the community that you think would be eligible for that type of listing.
Yeah, I think it's I think it will right now it's exchange because it's where people are coming in and out of Bitcoin trying to test what is this about, and that's what you see in the volume and the growth. But if you look at the metrics, there's probably 1.5 million people with Bitcoins right now in the world, roughly. I mean, it's a guesstimate based on what you can find from the wallet IDs, the ones that are active. And as that number goes up, which will go up exponentially over time, services around custody, custodians, and other things and other products that get delivered from being good, healthy wallets are going to be another set of big companies that are going to occur because the technology out there right now, it's not the greatest to hold coins neither here nor on your zip drive or on your USB drive or on your hard drive. So all of those things were I believe are going to become much more sophisticated businesses that are going to get built, that are going to make people feel very comfortable about having part of your net worth in this asset.
No, I think that's true. And towards that safekeeping function, I think a big step will be when we have a bonded company that does that, so that the loss of coin is actually backed by an insurance company or a bond. And we will see that, but it's...
Oh, yes, it's coming.
It's coming. Yeah, you probably know better than me. But okay, yes, I'd like to hear some questions, and these can be on any of the businesses or legal aspects.
My name is Matt. I'm an investor in Bitcoin and Bitcoin startups. My question is for you guys. What jurisdictions do you think are the most hospitable to Bitcoin commerce and Bitcoin in general?
Mickey, that sounds like right up your alley.
Who's going to take that one?
I think certainly Malta is in the forefront. Malta is a great financial hub, and they have great banks, long history. It's a great place to do business. It takes a little while to get in there, but Mickey probably has some additional comments.
No, besides Malta, Hong Kong, Singapore have been very proactive, or they're easy to understand. They're export countries of goods, so they feel good with some of those. They get very comfortable with that kind of ecosystem. For more exchanges or anything more financial oriented, the UK, like Dan was saying, tends to be more friendly. The regulators, the banks, are a little bit more tougher. They sort of don't like competition as much. They still like the old empire kind of mentality. So it depends, but those are like the most friendly places. And the US still is friendly compared to other places. I mean, it's still a great place to start some of these things.
I guess that was part one, which was actually a very good answer. Thank you. I also wanted to hear if you could address that in terms of supply and demand, or what is the most, as far as market opening, best.
So, that's an interesting question. A lot of my clients who have big businesses, due to the nature of Bitcoin, you can't really know where all those transactions are necessarily coming from. But based on the hits to the big sites in the area, so that's not really, doesn't prove who the transaction is being done. It seems like it's only about a third U.S. I don't know what Mickey's comment would be.
They're all over the place. I haven't been able to find stats that give you a good reading on where's the flow coming from. I mean, it's some you ping domains and you find a lot from Eastern Europe, and you find a lot, the U.S. retail base is huge. It's the biggest by far. It's ironic because I would have guessed it would have been backwards. U.S. are much more accustomed to having net worth in dollars versus the rest of the world tries to protect themselves from the local currency. But I wonder why that's happening like that, but I just don't have a read. It's hard to figure this out. If you have any insights, I'd love to hear it.
I really don't have anything backed by like numbers or facts. I put my ear to the ground a little bit. I heard Argentina, there was the guy the other night was saying that some old guy knew what Bitcoin was. I kind of gauge it on the average, 1 out of how many of the average person on the street has heard of it is kind of what I'm doing to look at it. So that's kind of what my take is. But thank you very much for your time.
Hi, my name is Kylie. I'm a speculative investor, and as you mentioned, Dan, with poker players, the FBAR filing is fine. What I'm curious about, and what I've had a lot of discussions with people about, is if you want to buy the coin and hold it, how is it recorded? Is it ordinary income, or do you need to find like a hedge fund and buy shares where they can pay it out as dividends or long-term capital gains? I'm not sure how this gets recorded. So if I go to Mt. Gox and buy $20,000 worth of coin and sit on the coin, but I don't sell it for a year or two, it seems like it doesn't matter when I sell it, it's still recorded as ordinary income. And I'm just curious how you differentiate or where it's going with buying long.
Well, the IRS hasn't come out yet. Canada's a bit more civilized. They've already come out and said that it will be capital gains.
Still confused, but.
But they did say that that would be eligible for capital gains treatment. In my opinion, it is an asset that should be eligible for capital gains. I'd take that position on my return.
So if I buy now, though, and the rule isn't out yet, and I just wait till the rule comes out, then I can sell it at capital gains rules, even though right now we're not sure.
I know a lot of people are taking the position now that it's capital gains. And you can take that position on your return, but it's a bit uncertain, and this analysis changes if you've received the coin from mining, because that's a different analysis. But
We haven't done that. That's really interesting, though, the mining issue. But just as an investor, though, wanting to know the best way to buy it, can you buy shares through a hedge fund and it's treated differently, or?
The shares of the hedge fund certainly are, there's more background on that, and certainly it's maybe a safer play, but most the miners that I know are taking the capital gains position.
Okay, thanks.
Hello, I was curious, as a business that wants to transact in Bitcoin, and you still want to be in compliance and everything else with taxation and everything, you had mentioned earlier that holding it in Bitcoin could be preferable because there'd be almost no regulation in that aspect. You're just holding on Bitcoin. But if you're a business and trying to be towards all that regulation, would you recommend cashing out into USD and then back into Bitcoin so that you can see that money trail? Or how would you quite deal with tracking your Bitcoin investments, especially if you have to use fiat in your day-to-day business operations?
So first, avoid using fiat as much as possible, and pay as much as. But fair enough. Just pay everybody in Bitcoin. That's what we do at the foundation. So that would be the first thing. I know that people are working on this exact project, building kind of open source accounting software that accounts for Bitcoins. I don't know where they are. That's what stage of development they're at and how fast that's coming, but. Hopefully that'll help you out a little bit. And Arlene, you might have some thoughts on this as well. So
It's.
I love your guys' vagueness, by the way, because I know you don't want to give ill advice to anybody, but
I know usually it's the lawyers
It's great.
being
It's
cagey,
great to hear a
right?
bunch of lawyers and accountants talk, right? It depends.
it depends.
Thanks so much for your
That's
help.
pretty much the
Yeah.
answer I've gotten from everybody. It's like,
It's Sunday, you can say it, it's fine. We're off office hours.
Yeah.
I think with any approach, you're taking a risk and you're taking a stand. I don't want to be like dancing around, but that's basically at the end of the day what it is. I think there are, it's evolving. It's an area that there are, as I mentioned before, diversity in practice and diversity in thought as to how it should be. So as it evolves, people are going to move from one position to another. What you need to do, I think, is to figure out which is the risk that you want to accept and kind of go with it. And as long as you understand what that risk is, then you're going to be able to move away from that if the general position changes or the evolution occurs in a way that you aren't expecting. I'm sorry, I can't, it's pretty vague, but as a CPA, we have recommendations, but at the end of the day, the rules, especially when it's vague, it leaves a lot of room for interpretation. So where you go with it will, as a CPA, we will advise you and tell you what the risks are, but there's no pure best answer at this point for any of
on
them.
that interpretation, the risk is so high there when you're trying to run a business and you have to interpret all the law yourself or have somebody that interprets it that potentially know about Bitcoin, potentially they don't. You kind of set yourself up for risk in that you're putting yourself in a box of you're regulating yourself against regulation that doesn't exist yet.
Yeah, so I'm working on it, okay? I'm going to DC, I'm working on it.
I won't speak about the IRS, but there's a procedure in Canada for taking certain transactions to the Canada Revenue Agency for an advance ruling. So that's another option that's conceptually open. I mean, if you're in the States, I don't know what the process is, but yeah.
Yesterday, my presentation where I was showing how to do accounting in a financial system treated as totally as foreign currency. When you do that, everything starts to naturally fall out.
I agree with that, and I think, again, I won't speak about the IRS, but the CRA is making this way more complicated than it needs to be. And if you treat it like a foreign exchange, a foreign currency, then the answer to the question, should I hold coin, should I hold fiat, is really just a business risk and a foreign exchange risk question, and it shouldn't be driven by tax. So.
And we have time for one more, and then we've got to wrap up.
Hi, my name's Leo. I'm from Australia. My question's on tax risk, what we've been talking about, and the categorization for Bitcoin. I'm thinking, my question is, given the speculative nature of Bitcoin and the odds are stacked against us, would it be possible to categorize speculating in Bitcoin as gambling?
Whether it's a difficult question. So most of the gambling rules focus on the purveyor of the platform in which you gamble. So I guess the question would be: is operating an exchange equivalent to operating a game of chance? And I think that would be a stretch to employ those rules, and I don't think that any of the gaming regulators are going to take that route. But it's an interesting comment.
Thanks, that's a good answer.
So, we appreciate all of the interesting questions, and I want to thank the panel. Thanks so much, Mickey and Patrick, Arlene, Stuart. If anyone has any questions, come on up and ask us. We're happy to talk to you.